Welcome to the CLS Monthly Market Review. I'm Rusty Vanneman, President and Chief Investment Officer here at CLS Investments. With me this month is Gio Zelaya, Client Portfolio Manager. Welcome, Gio.
Thank you for having me.
Well, this is going to be a fun review, unlike last month, because January was a great month for performance. Tell us some of the highlights.
Yeah, it's true. It was a great month for the markets. All major asset classes were up. Global markets were up close to 8%. U.S. markets were up over 8.5%. And U.S. markets had their best January performance since 1987, which was really awesome to see. And what led the charge? Small cap companies. After a debacle fourth quarter in 2018, returns for small cap companies roared back over 12%. For international markets, it was a great month as well, which is what we like because we tilt towards international markets. Yeah. They were up over 7%. Emerging markets led the way, up over 8%. So it was a great month to be excited.
It's fun to hear you talk all these numbers. These numbers are so big. It's like annual returns.
Yep.
This is only a month of returns.
True.
So, and usually January returns suggest that we're going to have returns moving forward as well. So our expectation was for a good year. We're off to a pretty good start on that. Well, one thing that I like to talk about right now when it comes to performance is that, as you know, because you're dealing with a lot of advisors and investors, is everybody's looking at their 2018 performance reports. And in short, one thing that happened last year, everything was down, but international markets were down more. And so a lot of people are thinking that international, when's it ever going to start to do well? That's the bad thing about looking at calendar-based performance reports. That's the only thing you can do is look at those. But really, there were like 3 different segments to last year, and the last big segment began in September. And starting in mid-September, what we noticed is that it was a major inflection point for a lot of different asset classes. And the big takeaways were international started to outperform, value investing started to outperform. The market is still down, despite the big gains in January. They're still down from the middle of September, but believe it or not, emerging markets are up over 4%.
Yes.
Real estate is positive return, bonds are still up. So things have changed, and it makes sense the reason why things have changed to September, because U.S. companies quit bringing back their profits, and as turn, they stopped buying back stock as much as they did before, and stock buybacks plummeted in the fourth quarter of last year. So anyway, it is very interesting. I actually think there's been a turnaround that will probably persist going into this year. So we're talking about performance, and something else I want to ask you is because, again, you're talking to a lot of advisors, a lot of investors every day. We're making some changes in our performance reports where we're making a couple really important changes, I think, that make a lot of sense. Tell us about it.
We made 2 changes on our performance summary reports. The first change is we're flipping the calendar returns from showing long-term first, then showing short-term performance. And the second change we're making is we're showing cash and fixed income. And two things on the subject. First, the way you show or you frame information to investors really has a crucial and lasting impact on their behavior. Here at CLS, the majority of the investors that we work with are investing for the long term, and we're long-term investors ourselves. And we believe, and behavioral studies show, that showing information in this way helps investors stay invested, helps them stay balanced and focus more on their long-term goals, which is what we want.
Yeah.
The second thing is the goal of investing is not necessarily to beat the bank, not to beat the market, but to beat the bank and inflation over time.
Right.
But for the performance reports, we're going to be showing cash and fixed income first, so investors can get in the right frame of reference when they're really thinking about what returns they should be focusing on.
Right.
And so at CLS, we strive to help investors really have the best investor experience over time. And so we believe doing these changes, these minor changes, will help us help them reach that ultimate goal.
I think this is huge. It sounds like a minor change, but it really is a big change.
Yeah.
I mean, it's instead of like looking at short-term, really volatile numbers in the stock market, so a lot of times they're down, so people get scared, or they're really big and people say, why am I not getting that? So be able to focus on the longer-term numbers first, I think kind of puts the right frame of mind what to expect from the stock market over time. And as you totally say, that putting cash in that first row, I mean, the alternative to investing is putting your money in cash. And I think that really highlights why you want to be in the markets, long-term investors. So
exactly.
Great. Well, thanks, Gio.
Thank you.
Also, in the commentary this month, we talk about our investment theme regarding Be Smart and how factor investing did in 2018 and how our smart beta security selections also performed last year. Spoiler alert, pretty good numbers. Well, anyway, thanks for your time and trust in CLS Investments, and we'll see you next month.